Hi, I'm Tom Lydon here in San Diego at the Schwab IMPACT Conference here with Michelle Fuller, who's head of ETF Distribution at John Hancock Investments. Great seeing you, Michelle.
You as well, Tom. Thank you for having me.
There's a lot going on in the ETF space, and I think there are more than ever a lot of choices, right?
Absolutely.
Yeah. And we've seen a difference in flows so far this year on the equity side. Maybe talk about that versus traditional indexing versus more intelligent indexing.
Yeah, absolutely. So, well, multi-factor, and that's where the John Hancock ETFs sit. In the multi-factor space, we've absolutely seen increased flows as investors are looking to really differentiate from cheap beta. To be specific, I was looking up some Morningstar stats before our time here together today. And if you look at the flows year to date, ETF assets in the cheap beta sit at about 19%. Assets in the single factor space sit at about 23%, and multi-factor is actually trumping both of those at about 30% of the flows we've seen year to date. So absolutely, folks are looking to differentiate from just the cheap beta side of things.
And we're interviewing and surveying advisors all the time. 3 years ago, 4 out of 5 advisors were allocating to cheap beta. Today, 2 out of 3 are looking for more intelligent strategies, and they don't mind paying up for it.
Right.
I think a lot of it is they're becoming a little bit more discerning about their portfolio strategies, but also advisors have something to talk to their clients about, and how important that is to make sure that there's some rhyme or reason to the structure as opposed to an index that's been around for 50 years, which again works fine though, right?
In some instances, yeah.
Yeah.
But in other portions of the client's portfolio, the need for intelligent indexing, the need for multi-factor investing definitely is warranted, and sort of that pay-up scenario is warranted as well.
So Hancock has a unique model in the fact that you have selected managers outside of Hancock that help you with your strategies. And one of your biggest suites is managed by Dimensional Fund Advisors, a name that many advisors know as well.
Yeah, absolutely. So our ETF lineup just aligns exactly with our John Hancock platform, which is finding best of breed sub-advisors to fill a particular asset class in a particular wrapper. And as we thought about launching our ETF suite, who better than Dimensional Fund Advisors in the factor space, in the multi-factor space, than to deliver those products, again, in that ETF wrapper to investors. So Dimensional offers several mutual funds under their brand. This is a way to access Dimensional in an ETF wrapper.
Yeah, and again, when you get that strategy and their great factor strategy in so many different asset classes, again, it's something to think about today as we're going into maybe uncharted waters in 2020. So we need a little bit more thought in our allocation, right?
Absolutely, for sure. So our ETFs are offered through core strategies in the large cap, mid cap, and small cap spaces, as well as the developed international and emerging market spaces. We also offer 10 sector multi-factor ETFs as well, all 15 sub-advised by Dimensional Fund Advisors.
Yeah, well, it's great, Michelle. I mean, a unique process, a unique relationship, and I know it's all about the reputation. Hancock's been around for decades and well trusted, but that partnership with Dimensional puts you guys in a great position as far as your ETF offerings. So congratulations.
Thank you. Appreciate it.